Football finance. Is crypto and NFTs a solution or a problem? Given the exposure to brand reputation are NFTs, fan tokens, and crypto in general the panacea that the industry had anticipated it would be? Should sports and other organizations like charities be a part of this spread when the risk on the face of current and past events indicate high risk and high volatility? The rise and fall in value when traded online can clearly become an issue for a fan base if things go wrong. And if one day that does happen, do clubs have a way to soften the blow for fans? The popularity effect. When Lionel Messi's deal with PSG included a signing-on fee partly paid in cryptocurrency fan tokens. Clearly this sends a message to dedicated fans, so much so that the tokens trended upwards leading up to the days of Lionel Messi moving to PSG. A report by the BBC stated that days before Messi officially signed for PSG, the club reported a high volume of trading of the token. It said that trading volumes of the token exceeded $1.2 billion, £722 million, in the days before his arrival. New sales generated about €30 million, according to Reuters news agency. Some early adopters gained as the value of the token rose over 130% in just 5 days. Since then, however, the PSG price has been on a steady decline. As of September 28, 2022, it's around $8.30, with a market cap of around $25.62 million. Whilst the opportunity in crypto and NFT builds, it is building in a deregulated, decentralized and highly volatile environment which is prone to challenges. Crypto experts are at odds. Some experts are predicting another devaluation while others are predicting a high. Some say fan tokens wasn't made to be a cryptocurrency investment. Rather, it was created to give fans a unique way to interact with their club. An article in Bloomberg states NFT trading volumes collapse 97% from a January peak. Digital art and collectibles recorded on blockchains have tumbled 97% from a record high in January this year. They slid to just $466 million in September from $17 billion at the start of 2022, according to data from June Analytics. The fading NFT mania is part of a wider, $2 trillion wipeout in the crypto sector. The wider context. Questions about due diligence and reputation value are very important considerations when thinking about venturing into NFTs and fan tokens. However, it is also worthwhile mentioning the volatility of mainstream stock markets, which are supposed to have regulation. However, when comparing the nature of the stock market, it is also highly volatile even with so-called regulation. The 2008 crash. Given what happened in 2008, and other instances since, it's fair to say the financial service industry is also lacking in meaningful regulation to the extent of protections. However, recently some ring-fence procedures have been implemented. Only time will tell if these changes will be effective. As shown back in 2008 when a vast proportion of people lost everything partly because of the lack of regulation and checks. It is fair to say the mainstream banking system has evolved. However, the estimation of what the 2008 crash cost the taxpayer rocketed into the trillions. So why should crypto firms be any different with regard to regulation? Case in point, in a public interview, Shark Tank judge Kevin O'Leary said he's lost all of the $15 million FTX paid him to act as a spokesman for the now collapsed crypto exchange. Since Sam Bankman-Fried's cryptocurrency empire crashed. A Wall Street Journal article bemoaned the loss of charitable donations from FTX, arguably propping up Bankman-Fried's strategic philanthropic pose. Early estimations of the overall loss could be $7 billion plus. Other high-profile sports and celebrity ambassadors were sued by FTX investors who say the exchange's ambassadors should have done more due diligence and exercised a greater level of care before promoting the crypto empire. The fact is, NFTs can be very speculative ventures, leading some to think it could lead to some buying into them and playing the pump and dump game, which is the act of inflating the value of something in order to sell it off and leave the buyers holding a useless asset like a JPEG. However, it looks like the technology is here to stay, and it is still early days in the core concept's development. So what are the pros and cons? As with any technology or innovation, NFTs, and fan tokens have both potential benefits and drawbacks. Some possible pros and cons of these technologies include: pros. NFTs and fan tokens could enable fans to become more involved and engaged with their favorite teams or organizations by allowing them to buy tokens that represent a stake in those organizations or give them access to exclusive benefits. This can range from what music gets played at halftime. However, buying fan tokens won't give you a vote on the team's overall running or any power in the boardroom when it comes to the direction of the club. Fan tokens will give access to voting rights in areas the club determines, which will be varying in its significance. NFTs and fan tokens could also provide new opportunities for creators to earn income and recognition for their work, by allowing them to create unique and verifiable digital assets. Cons. Supporters risk their own money through unpredictable and unregulated digital currencies, given the economic cycles we have had over the last years. Should clubs be asking their main target market to take risks? Given the continuing cost of going to top-level games, some fans could see fan tokens as an addition to what is already a very expensive devotion. Some fan groups have stated that clubs are exploiting the fan base and see NFTs and fan tokens as exploitation of the fan base. Issues around crypto companies and club reaction. Norwich FC axed a £5 million sponsorship deal with BK8, a crypto online casino, after just 3 days following a revolt by fans over the company's sexualized marketing campaigns. Barcelona cancelled their marketing deal with Onyx, a NFT marketplace, 5 days before they were scheduled to auction their first NFT collection, as the platform was linked to Israeli businessman who was recently arrested for crypto fraud. Man City's partnership with 3Key, a crypto trading startup, lasted 1 week as the company turned out to have no online presence, contact details, registered office, or company number. The high cost and complexity of buying, selling, and storing NFTs and fan tokens may make them inaccessible or impractical for many people, particularly those with limited financial resources or technical expertise. Clearly, most NFTs and other forms of the metaverse are targeted at the world's first online generation, which, given the wider macroeconomic developments around this segment of the world's population, can be characterized as very challenging on a number of points, which is beyond the scope of this article. In conclusion, there is also a potential for NFTs and fan tokens to create new forms of inequality and exclusivity, as wealthy individuals and organizations may be able to afford to buy large numbers of these tokens and gain disproportionate influence or control over their use. The crypto NFT markets contain a lot of perceived value, and stakeholders need to navigate these waters carefully and do proper due diligence on these deals. Many industry leaders are saying crypto isn't the panacea that the industry had anticipated it would be. The failure of FTX may suddenly change everything. The reasons for the crypto exchange's demise, which famously had deals with the Miami Heat, Golden State Warriors, Mercedes Formula One team, and a slew of athlete ambassadors, are undeniably nuanced, but it will do little to increase trust in a sector that many people already had reservations about. Overall, the potential benefits and drawbacks of NFTs and fan tokens will depend on how they are used and regulated, and it will be important to carefully consider these potential impacts as these technologies continue to evolve and gain popularity. Fan tokens are volatile in price, but they can unlock some benefits driven by the clubs, which could range from fans winning VIP tickets or unlock exclusive merchandise. The overall question is, in the long term, will fans be left exposed? And if so, to what extent is the club culpable from a reputational perspective? Given the growing cases of players demanding more control over their image rights, to what extent will the player be exposed if they commit to a crypto or NFT failure? And what will be the knock-on effect for the player's sponsorship potential?
This was a short introduction from Dynamic Sport Marketing. Please like and subscribe to our YouTube channel for more videos like this.